Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest for you today. It is an incredible individual that I met the first year I was in the mortgage industry. She's a recognized leader in business development, complex technology environments, strategic alliance management. She's got an incredible background span in 30 years in financial services, helping businesses grow, helping leadership drive the necessary revenue and ROI. She is a friend. She is a fellow Michigander. Please help me welcome Kathy Mantych, VP of and Account Executive at FirstClose. Kathy, welcome to the show.
Thank you, Michael. It's a pleasure to be here. Thanks so much for having me today.
Oh, it is great to see you. We're doing it virtually. We're Michiganders, and most of the time when we run into each other, it's at the airport or sharing a cab or an Uber to one of the conference hotels. But it is great to have you as a guest.
Thank you. I appreciate it. Yeah, and you and I have known each other for a very long time. Absolutely.
So it's been great, and through that, we've experienced a ton of ups and downs in the industry. Tell me a little bit about, I've mentioned how long you've been in the industry and the great experience you have, but for our listeners that maybe don't know you, tell everyone a little bit about your background in financial services.
Yeah, absolutely. Thanks. And I hate to date myself, but I really started in this industry back in 1988. I'm going to call out a couple folks. Kelly Booth, who's a longtime friend of mine, and she is also still in the industry. She called me up one day and said, we're starting this new industry called electronic laser forms. And she says, I don't know if it's going to go anywhere, but we're building all of these forms. It was going to be a subdivision or a subset of VMP Mortgage Forms at the time, who was a real catalyst in this industry a long time ago. She says, I don't know if it's going to take off, but, can you help us start building that? I said, sure. Well, and 17 years later, after many different positions there and different throws and things and ups and downs of that particular position and company, I was still there and learned so much from that company and the positions that I was in, and not only Kelly Booth, who was instrumental to really bringing me up in this industry, but Roger Godova, as who many of you know, who's retired. He really, to me, was the godfather of the industry. He had his hands in so many different silos of the industry, and he really was a wealth of knowledge, and I have to give a shout out to him because he was truly the man to go to if you wanted to know anything that had to happen with the industry.
Oh, well, and I love that you mentioned Roger. I've been on boards with Roger. I always refer to him as I'm glad you said it, the grandfather of mortgage technology. I mean, you're right. He was connected. He had a pulse. And I think one of the greatest attributes that I loved of working with Roger is he truly wanted to add value to the industry first and foremost. He wasn't trying to sell you anything. He wasn't trying to push you into one way of thinking. He really wanted to discuss what he thought would be best for the industry and how could the industry come together. So tell me about some of your other experiences. You've had a wealth of knowledge. I mean, you were at VMP. We worked together. I was at Dynatech. We got forms from you guys at VMP. That's how we've met. But you also have a lot of other financial industry expertise and experience past VMP.
Right. So after that, I really started taking off, and I'm glad you mentioned value, and we'll touch on that in a few moments. But I think throughout my career, I really have taken the time to not just be with the company for their technology, even though technology is just, a mainstay and a pioneering of thrust of this industry and has been for so many years, but really the value of the company and what they bring to the industry. But so after my stint with the VMP and all of that now is under the Wolters Kluwer umbrella, I started moving on to other partners, so to speak, and some of those partners, and in fact, I'll just digress for a moment. One of the first partners that signed on electronic laser forms was Dynatech, as you well know. But the industry certainly has grown since then. So the partners that I was with were LOS partners, and I sold LOS platforms. I sold servicing platforms over the period of time since then. Default management, construction lending, doc prep was a big mainstay for me. Legal and compliance services, and then QC analytics, compliance around QC analytics. So I've really kind of dipped into, I would say, the many varied silos, all under the same industry, but definitely different silos of the industry. So it's really been fascinating to see how not just the growth of the industry over those years, but the technology that's really pioneered and pushed it forward along the way. So that's
so let's
been
talk
really
a little
intriguing.
bit. You mentioned the technology, and I'm glad you brought that up. So as we talk the technology.
Yeah. So go ahead.
I was going to say, as we talk the technology, tell me a little bit about some of the things you've seen and where you think technology has evolved the most.
Yeah. So it really is fascinating. Starting back again in the old days, we would get out those floppy disks. and it was so exciting because you could get your compliance on a floppy disk, or, oh my gosh, then they started burning cartridges, and that was really something when you could put that cartridge into your printer and out came all the forms with the data. Wow, that was really something. And honestly, it really has progressed tremendously. And all of the different verticals, I really have seen this huge push for digital, obviously, for many various reasons, for streamlining approaches and really getting that borrower experience to where it needs to be. We all talk really avidly about, the value in the borrower experience. And that really, to me, has, it's a broad meaning, right? Value is different definitions for each of us. And I think that value to a vendor is different than value to a lender. You can have the best technology on the planet, but if you don't stand behind what you are selling and giving to the lender, if it's not consistent, if it's not dependable, if you don't have a trusted partner that has developed that technology for whatever silo you're in, whether it's, origination or servicing or what have you, then that value is meaningless. Then you're just selling widgets. So what is that value? And that technology really is going to pull that through, I think.
Well, I love how you mentioned, it is about the value. And I think so many times people talk about technology. Technology to me is a great enabler if it's used properly. If it fits into the lender's current tech stack. And then to your point, if it's fully supported by a company that's going to back it. So not only with great and consistent updates, but somebody who truly knows and has a pulse of the industry so that they're forward thinking of where things are going, not just waiting for the lender to tell them what they need to do in the system.
Yeah, that's so true. And no one could have predicted what happened over the past year to 18 months. I was on a plane. I had just landed in March, and my husband said, they're shutting everything down. This is it. And I was at another company at the time, and they were scrambling. We were getting phone calls off the hook. What do we do? How do we handle this? And it's not just about the technology, and it's not just about the value, but it's being prepared. We don't know really how long this is going to last. And I think if the pandemic has taught us anything about technology and value, it's really taught us to be prepared. And it's really taught us, oh my God, we can't scramble anymore. We have to, as an industry, we have to adopt the technology that's out there. There is some phenomenal technology that can help lenders and servicers and appraisals and appraisers and whatever your niche market is. But it's time to start adopting them. I've always that's always been my mantra is the technology is there. Your trusted vendors, your trusted partners are there. You need to lean on them. And that is so true. And that is so apparent as to what happened this past year to 18 months. People were, were cobbling together pieces of technology to make it work. And so the process was broken. There was disparate systems and there was fragmented processes and, the list of, because the demand for what was happening in the market at the time too. Prices our rates were at historical lows. So it was the perfect storm,
Right. Well, and I think a couple of things. Anytime we talk about, COVID, I never minimize the effects. A lot of people have been very deeply impacted by everything that has happened. So I don't want to ever minimize that. But as we start talking tech in the mortgage industry, in many ways, what COVID did was accelerate people's adoption to more digital practices because they were forced to, right?
Yeah.
There's been a lot of great technology for the years. You mentioned Roger Godoba, and Roger and I used to say this a number of times. I mean, I could grab an article he wrote 15 or 20 years ago that talked about the e-mortgage, and I could replace the word digital with it, and the same thing would be relevant today.
Yes.
But I think what COVID did was when you couldn't get an appraiser to go into a house, when there was lockdowns, people then had to start looking very creatively to what are the technology? How can we do different valuation models and still keep the process going? What can we do to have the individual consumer walk through their house and be able to show, is it in good condition? Does it still need work? How realtors started embracing all of the virtual open houses. I mean, and we could go one after another, e-closings and e-notarizations and people meeting you on the curb and they were masked up. But what it did was it forced people to look at their technology stack and say, what are we missing and what can we do? And I think to your point about being prepared, what it's really taught us is we don't know what's going to be next. We don't know if this pandemic is going to continue to linger on for the next year, 2 years. We don't know if there's going to be another pandemic. We don't know if people are going to all go back to work, if people are going to work remote. More than likely, it's going to be some sort of hybrid somewhere in the middle.
Yeah, we truly don't. That's so true, Michael. We can guesstimate all we want, but we really don't. So now is the time, and I think that lenders and institutions, credit unions, mortgage companies, I think they have all learned from the past year and a half. I would have to say pretty well. I think they're starting that movement as to, oh my gosh, we really have to jump on board here, because if we don't, we can't keep cobbling together fragmented processes and technology. We really need to streamline that process. And it's not just for the sake of getting it done. It really is for that borrower experience. Because now the borrowers that are applying for loans online, and I read an article recently where it's 50% more or 56% more than what it ever has been from the previous year. And because it has had to happen, they've had to go online, as you were mentioning, virtual appraisals, valuations. They've had to apply more than ever online. Excuse me. And so the lenders have had to adapt and really, really take a deep dive look at their technology and say, all right, what do we have to do to make this a streamlined process? Because our borrowers are getting upset and they're now expecting They're expecting that approach to be consistent, to be always online. Now, we're never going to go back. It's not going to happen.
Well, and I think you make some really good points as we talk about the borrower experience. The expectations are completely different than they were 5 years ago, 2 years ago, prior to the pandemic. Some of it I call the Amazon effect, right? I mean, I can go drive somewhere to a bookstore, get out of my car, walk through the books. Hopefully they have the one I want. Or I can sit at my computer and I can order it. And the expectation now is, in some ways, if I don't get it this afternoon, I'm kind of pissed off, right? I mean, I expect that on demand, full transparency. Now they're recommending other books that I might want to buy, other products. And if I don't get them today, I have it tomorrow. And
That's right.
That same expectation has flowed into mortgages, into financial services, into all aspects of our life, that people want information. They want, a full status of where am I at with things. So as we talk tech and we talk the borrower experience, Kathy, what do you think are some of the biggest impediments still for lenders to really get to this next level that we need to get to?
I think they're still searching and scrambling a bit for what that technology is that's going to work for them. Again, we've talked about there's so many different platforms out there, and there's a host of different platforms. And true that some lenders have niche markets more than others. So I really think that, first of all, going back to the value, you need to be able to trust the vendor that you're working with. You need to be able to say, I need a consistent approach. And that approach needs to be consistent all the way through, because my borrower is going to expect it of me as the lender. And so if my partner, if my trusted vendor with the technology that I have chosen can't deliver what they say they are telling me they can deliver, that's a problem, because you're just repeating the same mistakes over and over again. So it has to be consistent. It has to be, yes, not just faster and not just more streamlined than ever, but it really has to be, I think, the trifecta of that whole piece. It's got to have the value, it's got to have the consistency, and it has to be a trusted partner. Technology is great. Technology is great, and there is a whole lot out there that, people have just created over the years that would just blow your mind. But if it doesn't have that three trifecta, I think you're not a win.
So what are some of the ways people could vet the different vendors and providers so that they know? Because every vendor is going to say, yes, I can do that, or I can't do that. But what's a good way for lenders to vet that and really have a good understanding of what those capabilities are?
Absolutely. If you're searching and if you have heard of a particular vendor, call them up. Ask for that demo. I mean, there's no better way than to have a demo and to, it's very trite to say and it's very Pollyannic, but try it out. Call them up and say, I want to see this. I want to see the ins and outs. Tell me how, as a vendor, you're going to be able to complete my needs. Show me what that looks like. How does it work in a live environment? I don't want to see smoke and mirrors. I don't want to see, post-ups or pictorial overview. I want to see how it's going to work today, live. How is that going to help me? And you need to see that as a lender, as an institution that's going to be utilizing that technology. You need to really see what that's going to do for you.
I couldn't agree more. So as we're talking, tech has evolved quite a bit. The borrower experience and their expectations have evolved. You've been on the sales and marketing end for your entire career. How has sales and marketing to lenders, to vendors in the financial services, how has that evolved?
Yeah, it really has. I'll take you just very quickly through what I have seen over the past, 30 plus years. I think it started out as relationships. And honestly, today it still is about relationships. But in between that time, it has gone from everything to, wow, look at this cool gadget, and this is really great, and you should, take this from me because I'm telling you it's so great, to a really consultative approach. And I can't stress that enough. I have seen it go from, oh yeah, we'll just call you up and we'll order that piece of software or that compliance service or, whatever that piece of technology was, to, no, I want you to come in and let's sit down in my shop. We'll pull in the different departments and we'll see how this is going to work with them. And I think over time, lenders truly have said, you know what, I really need to rely on my processing folks or my closing folks. I want to hear what they're going to say about this because those are the folks that are going to be using it. Not what I think as the CEO or the decision maker, but really as, my people need to take a look at this, a deep dive. I want their opinion. And I think that has truly evolved over the years, where it wasn't so much as a top down, but I think it's really become an organization-wide approach on how they are purchasing what they are purchasing. So it's much more consultative now. The value has to be stressed more now than it ever has, because if the folks that are internal inside who are using it day in, day out, don't meet their numbers and don't get their production up, then that's a problem. And then, the executive management is going to come in and say, well, what's going on? You took a look at this piece of software. Why isn't it working for you?
You make so many great points. And I think, even from the marketing of how you do outreach, a lot of it has changed. Early on in our careers, a lot of it was we would just push stuff out. Email marketing wasn't even big then, direct mail marketing. We would go to some conferences and trade shows. But I think what I've really seen an evolution of is, yes, there's all these great technology tools, and you can do retargeting, you can do geofencing, and you can email, and now you can use video, and you can use text messaging. But it all comes back to the core fundamental belief of, are you building and enhancing relationships so that you have the opportunity to present value?
Yeah, absolutely. The past 18 months have really been a switch for folks in sales and marketing, because you had to go back to your grassroots, because you couldn't jump on a plane anymore. You couldn't jump on a plane to go sit in their office to say, all right, now let's bring in your departments, because the departments were at home too. So you really had to go back to, all right, now I've got to rethink how I'm going to pitch this. And again, back to the relationship. Now that you are working from home, processor, underwriter, closer, help me understand how we can fit this technology into your process and how it's going to work for you. It really was a switch for us too.
Absolutely. And I think the people that leaned into digital, that embraced, whether it's LinkedIn, whether it's Instagram or whatever, and continued to use those tools to build relationships, have found, even as we're starting to come out of the pandemic to a certain extent, they can now use those tools. And because they built relationships, that when they do meet live, those relationships are even more meaningful. Those people are more willing to meet with them than just somebody reaching out. We've talked trade shows. I know we have MBA Annual coming up. Tell me, are you going? Are you excited? Am I going to see you on the plane from Michigan to San Diego?
Well, it's hopeful. We're supposed to go to the CBA, and that got canceled, understandably. But so far, cross our fingers, we'll get to see everybody at the MBA. Super exciting for those who are going, and understandable for those who are not. I have talked to many in the past week and a half or so. Some they're backing out. Their companies are, restricting travel. They may be only sending, one or two people. And it's kind of really is a bag of tricks as to whether people are going to be going. But yes, I'll be going. Hopeful to see everyone there in good health. Because really, honestly, I love this industry, and it really has been driven through relationships, no matter the twists and turns that the relationship has taken, whether it's technology or the approach or the value or, all the variables that have come into play over the past 30 plus years, really is, I think the people who are in this industry really deeply care about what they are putting out, how they can help their lenders, their institutions, their credit unions, their banks, and how they can help them deliver value to their clients. I know that's how I feel. I don't know, how the rest feels, but I have stayed in this industry because I really place value on what this industry does as a whole. And I think it really is driving so many great technology platforms over the years that I have seen. And it's really fascinating to watch. And some of the people that are in this industry are longtime industry vets, and that's very telling. And it's not just because, oh my gosh, you need a job. It really is watching the technology evolve. It's watching the value intertwine with that technology, and it really, really is deep rooted in, oh my gosh, these people really, really care about what they're doing because they're still here.
That's such a great point. And we both talked about the decades that we've been in the industry. And, the joke is once you get in, you never leave. And I think it's because of what the industry affords so many people and the impact that the industry has, that when we do things right, we help bring home ownership to people. We help make a difference in their lives. It's one of their largest financial decisions they'll ever make. So, Kathy, before we wrap up, I'd be remiss. You're at a new company. Tell me, where are you at? How can people get a hold of you for MBA? Give me some updates.
Yeah, absolutely. I've been with this company now for, 2+ months. I think over the course of my career, I've really followed three things. Again, I keep heralding on those three things, but really is technology, value, and the team that sits behind it truly. This company is called FirstClose, based out of Austin. And they are a technology platform that really sits at the heart and in the middle of all things settlement services. So it is a platform where lenders and banks and credit unions can really take advantage of that virtual experience in one place, one platform. If you need to order AVM, appraisals, closings, you name it, everything from app to funding and everything in between to get your property report, your property condition. It really is truly what we used to call back in the day a van, but now it's, on steroids. We are hooked into hundreds of vendors across the country, and you can get your information for your borrowers within 30 seconds and close your loans, in half the time that it used to take.
Oh, fantastic. So, Kathy, as we wind down, what do you see for the rest of this year and into next year as it relates to the mortgage industry and technology?
Yeah, I would say that in the next several months, as we were talking earlier, there is no time like the present to be prepared. If you haven't taken a look at your complete tech stack, now's the time, because we truly don't know how long this is going to go on. We have no idea. There's different things swirling around, so really be prepared. Start looking at your organization from a holistic point of view. Review your tech stack in total. And take a look at all those processes and get a platform that's going to be as streamlined as you can get it, so your borrower experience is top-notch to what your value core is.
Oh, fantastic. Kathy, thank you so much for your time, your insights.
Thank you.
And for being a guest on this version of the Fintech Hunting Podcast.
Thank you so much. Really appreciate it. It's been a pleasure.